All right, let's see here. Sorry about that, guys. I was the baby just got out of a bath. She was yelling "dada" from the other room, so I had to go say hello real quick. She is in her jams now, so we can get started. So, little craziness today, right? Just slightly, maybe a little bit, more than a little bit. Let me pull up these windows. Also, let's do a quick sound check. Make sure you guys can hear me. Just got out of a bath. Sounds like I'm coming through okay, but you guys let me know. Let's get this out of the way. Get medium. Crank everything back on. Apply filter. The music's kind of dope. Yeah, try to get that to get us a little pumped up, you know? Let's play some forex poker. Yeah, basically, right? Talk about like a weird kind of screwy kind of day, right? I mean, it started off with really nothing. Again, looking at the ATRs of the day, you can see this, but this is more or less basically 2 p.m. on, right? Most of these numbers are really just kind of 2 p.m. on. It wasn't really doing a whole lot before that. But it's better than a bunch of ones, 11s, 12s, 9s, that kind of stuff we've been dealing with. Again, obviously dominated by the US dollar. I mean, you can see, over here we have the pound yen. 34 pips. So, I mean, 34 pips is nothing for the pound yen. I mean, that's less than 30% of what the overall movement is for the day. So, it is what it is, right? I mean, even the pound Swiss. I mean, the pound Swiss takes the, I guess the third place, right? Pound cat or dollar cat is right there. So, I mean, these two guys are taking, really silver and bronze, but barely, right? Minus the euro dollar. And again, it's funny. This went straight down, right? Typically when you lower interest rates, okay, when you lower interest rates, it becomes less attractive because, there's not as much of a point to put your money there because you're not getting anything for it, right? So it typically is not as good, right? But today it just sent the dollar through the roof, right? I mean, they're expecting, obviously, stock market kind of collapsed today, but when you're keeping that interest rate low, there are things that you can do in your economy. So I guess everybody in the world is convinced that the economy here is going to start booming again. Even though there was kind of mixed data on China, it's kind of like, well, whatever. But it's just games, manipulation, And again, you guys can see here, this euro dollar was down huge, right? Which means dollar strength. But yet you look over here and we have dollar CAD, but that's green, which means CAD weakness. But CAD number was really, really good. So you can see it was all dictated by these two, right? Interesting thing about this statement as well, if you guys listen to it, is he made the comment today, and I heard this on a few different places. Literally, I've been running around all afternoon, but he made the comment about how this is not the start of an easing cycle, which is kind of what we were looking for. A lot of people originally were saying that what we really needed was a 0.5, not a 0.25. And then they kind of came out and made a statement. Everyone's like, oh, it's going to be 0.25. They basically just said it right now. But the big question was this going to be a one and done, or were there going to be further, the potential for further cuts? Okay, well, making a comment about how this is not the start of an easing cycle pretty much is language, or pretty much you can decipher that it is considered a one and done, which I don't know is necessarily what the market overall wanted. I believe the last data point I saw said that 20% of the participants or surveys still believed in 0.5. 20% is not a bad number, right? And a lot of those people may have said, okay, 0.25 is okay, except if X, Y, and Z happen. Well, now they basically made the statement. They just threw it down and said, hey, this is not the start of an easing cycle, which is interesting. All right. So look at, let's see, I'm here for the important call with the way here, but okay. That works, Josh. Ernest is calling. Ernest is throwing it down. He's like, let's go right to Swissy. All right. I'll go right there because you're requesting it, because it's you, Ernest. All right. So this is basically the candle that we had today is the pop through, right? Everything started from here. Again, we were grinding down. We went through the purple that we had talked about as kind of our first initiation target, breaking through. Interesting thing on this one as well is the reason why we originally placed this target is because we had a zone here and we had one touch, we had two touches, we had three touches, and it broke on number 4. But likewise, what do we see on the top side? We saw 1, we saw 2, we saw 3, and then this was number 4 that exploded through. So it did go back up to the area, and again, this area was based off of the daily, okay? Now, if you remember me talking about news, there are certain things in news that are great to play retracements on and certain things that are not as good, okay? Things that are fundamental changes, we're not going to see the retests or the retraces as much, okay? And why is that? Because it's fundamentally shifting how the market is working. A number that misses because unemployment went down or up or anything, that doesn't change really what's happening day to day. It's not like if we drop down to a 3.6, next thing you know, this entire block of 200,000 extra people get a job. It doesn't work out that way. So there are actually different types of news releases. So in looking at this chart, I mean, really what we got to focus on now is, yes, this was a great area. It already hit it one time. It came up. Again, it drove back down again. It kind of pushed, nice little push back down again, grabbed orders where it should have. And then again, the news today just kind of launched it through. So the zone is basically dead now. A couple of different ways we can look at it. One, we can look for a somewhat of a retest to take this higher, right? A momentum breakout trade. And again, you guys can see here, it did pull up, it did pull back, and then it did go further, right? Off of the level basing right here. But again, if we're going to use this zone, again, it's on two different areas. This was drawn off the 4 hour, not the daily, but it just happens to coincide. Again, we could look to go long, okay? Problem with going long is you have this piece right here, okay? Now, it is slightly above where we are. I know that it looks like it is lower, okay? But that's where the zone actually is. So we're kind of right there, but what we need is we need some type of movement to kind of push it a little bit further. Now, being that it's the Swiss pair, okay, obviously this is dollar strength, okay? I'm always very, very cautious about this one because you'll notice this one tends to change and shift before the actual zone. So we could definitely get somewhat of a shift in this one early, okay? That could be what we're starting to see right now. But if you're looking at it as well, again, if we're using this prior area of supply as demand now as kind of the launching point, we also have to take that into consideration is that's probably where it's going to hit, right? This is old supply becomes new demand in a retest. And again, you guys want to see that. You guys can kind of see it here, right? Came up, pulled back, came over, went down, up, down, and then came across. So it did have a bit of a stalling, that little bit of a pullback right here. Okay, but if now this is the area that we're going to use as our demand area because it used to be supply, okay, that area is about 14 pips, right? The area difference between these two is also something we have to take into consideration, okay? We're only talking about about 25 pips here total. So looking to short this one right now, again, I am definitely bearish this pair. It is definitely pushing up. I do like this area, but the one thing that does concern me a little bit is this area only being about 25 pips away, okay? Targets on this one, obviously, if we do get a flip in here, I'm going to have my targets down here for my first, and again, probably over here for my second. This will give us maybe a little bit of a hiccup, but I think we can get back down. It's just, again, finding the reaction, okay? Now, this is obviously a very kind of upward move. It is going to run into something. This is a very, very strong level. 3 candles basically straight down with almost no, I mean, this little wick over wick is the only thing that really gave us any issue whatsoever. This is a nice zone, okay? I'm drawing it here, but you guys can see there is 2 other candles that actually formed it. So I wouldn't say that this is the A+ zone, but there's definitely, definitely somebody who's pushing things down here. And again, that's probably why we're seeing a little bit of retracement here because of the power of this candle. Let's see, how big is that candle, by the way? Yeah, that candle's 105. So that candle is basically double what the ATR is on this pair. That's a big mover, right? Very, very big mover. Where are the other questions that people are posting coming from so I can see where it is? Good question, Edward. Edward, we stream in 2 different locations right now. We are on YouTube and then Twitch at the same time. Okay, so that was a question Ernest posted over on Twitch. I typically like to ask the question so both sides can actually hear it. That way everybody's able to kind of follow in without kind of questions scrolling across everything. So for me, I do like this one. This would be one of those times where I would actually kind of go across and probably I would probably lean more towards trading this one over Nadex, just because if you could find a spread up here somewhere, or you can get some type of an out of money binary, so your risk is smaller, I think the risk to reward payout is a lot better. Unfortunately, because it is based off a daily zone, let's look at it on a 4 hour and see what it actually looks like. See if we can shrink it. That was from a prior trade. We can shrink it a little bit. Let me see. I'm kind of having to do it the backwards way, but kind of shrink it to there. Now let's see. I'll move this up. So we're looking still about a 20 pip zone. Okay, it's going to be hard to shrink that thing much farther down. That 4-hour zone is a pretty distinct zone, right? Pretty clear, right? Where the and again, we could take it. I guess we could go a little bit higher, right? We could go here and try to really kind of scalp down on it. Actually, I'd probably want to incorporate that green body in just to be sure. I mean, that's about as tight as we can get on this one on the 4-hour. And we're looking at about, let's see here. Oh, that's not the one I wanted to move. There we go. You're looking at about 13 pips. Okay, 13 pips is definitely much better. Right about there is the perfect area. Okay, so we still got a little bit of space before we get up there. Okay, we're currently at 99.67. That is just happens to magically be right at parity. Okay, parity is obviously a magic number. You get that many zeros in a row. But again, parity is a legitimate level for many different reasons. It's a psychological level. Price will get drawn up into it. But again, it's also an area where we've seen, sellers before. Okay. Hopefully that answered your question, Ernest. For me, I would probably wait till we get up to parity and then start looking at levels. There's no news overnight. This is where overnight is going to be dominated by pound. Okay. I don't really see too much in there. And again, you guys can see the ISM manufacturing number. That's going to be the big driver tomorrow for the dollar. Okay. So for me, that's kind of where we stand. I would wait until it gets back up into the parity level. And again, we have about 30 pips from where it goes right now. It's got about a 46 or 40, I think it's 43 pip ATR on it right now. So it's got to move almost an entire ATR higher to be able to get there. Okay. And again, if you're looking on the larger time frame, what are we right now? We're in an uptrend. Okay. Without a pullback, there is no uptrend setup. There was an uptrend setup to here, right? We were in an uptrend. There was the setup piece. It came down and it kind of grabbed a little bit early. It grabbed right below this area here on this kind of grind down. It grabbed there. Okay. So the uptrend setup grabbed this piece. Okay. And again, you can't actually see it on the 4-hour. Typically, you want to stay within 6. Can't see it here, but you can see it on this time frame. Okay, so uptrend setup. Didn't see anything where it was pulling back to. You can see the bar here. It came down, touched, then launched, and it went right up. I mean, it went where it was supposed to go. Might move none. Yeah, it could. Yeah, I mean, non-farm payroll always has the potential to move. But like I said, first things first is you're going to have to run into this, the ISM manufacturing numbers, which again, manufacturing is not a bad thing. And then obviously going into the first Friday, this is going to obviously add more fuel to the fire. Yeah. I mean, other things that could fuel that though, anything coming from Trump about China, trade war, Europe, any of those things could really start kind of messing with this one. But yeah, so that's what I would kind of wait for right now. But again, uptrend, setup, no pullback here. Here's the pullback on the 30. And again, this is why you got to look at multiple time frames. Grab the hidden order, shot right back up, grab this area, and is now pushed and gone through it. Okay. All right. So with that being said, we covered that one real quick. I didn't know if Ernest was in a trade and needed to get out of it real quick or whatever it was. But going into tomorrow. So tomorrow is literally dominated by the pound. Okay. There's a lot of pound information. Not expected to be a bank cut or anything like that. But again, new guy in. Hey, he's not the one that's going to be announcing the monetary policy summary or the inflation reports. But again, he could have a response to it. Okay, I don't know if you guys saw what I posted earlier. Let's see, where is it? Let me open this up for you guys so you can see it real quick. So this was a statement that I found earlier, and I thought this was pretty interesting, that we are now officially 100 days away. And the fact that the Prime Minister is trying to convince others that we don't need to have a deal, but we're going to leave at the end of October no matter what. And it shows that 50% of people are now okay with that. It's kind of like, huh. And he's putting people in areas like this bottom piece right here. He quickly gave key ministerial, I can't say that word, ministerial. You guys know what I'm saying, right? Post to the to those favor leaving without an agreement rather than accept a withdrawal. So he's putting people in where he needs them to be to get out of this thing with basically any way he wants. which again is kind of, you would think it's kind of rogue, like, oh, we don't need to, we're just going to leave. It's fine. We're leaving no deal. Who cares? Forget it. Yay. Dangerous for the pound. Dangerous for the pound. Okay. Um, so we'll see how, what comes of that whole thing. But again, a lot of that will start with tomorrow. Again, particularly the inflation report, bank rate. I'm not really concerned about that one, but the monetary policy summary I think will be a big deal. The vote thing, and I never did much with the vote thing. It's going to be hard to tell what kind of moves what, but that's going to be 7 a.m. Eastern time, so a little bit earlier than what we normally see news releases. And then again, Carney's speaking at 7:30. Okay, this is kind of like the post-hangover effect, but some of these numbers could really be moving. And the nice thing about it is it's not too early. It's not that, a 3 or 4 o'clock in the morning release, which is nice, okay? All right, so with that being said, let's start from the top here for the Aussie yen. Okay. All right, so this is where we had our target set, right? And it's funny, Aussie yen came all the way down, it popped the target, it went up, and then it kind of came below and hit this little kind of single wick against the wall. So it kind of moved through. Obviously, trade is done at this point. Where we are at the lower end of the spectrum, right? We've had 2 wicks. They are kind of going down. It is driving deeper each time. If you look on the 30-minute, you guys can see that not only this pop came across, right? Went down, pop lower, hit the next area below, this kind of sawtooth effect right here, and then retraced all the way back up again. Okay, so again, obviously racetrack to the downside, entry, retracement, stopped right up top. Okay. Now again, on the 4-hour, you guys can see on the 4-hour, we still have a bit to go on the retracement. But if you look behind this candle, you can see there's a pretty big wick back there. The wick actually comes down to where this kind of target, right where we are right now as far as the line goes. But again, the 74.74 was kind of where we were targeting. It came, it tagged again, tagged it, jumped, went all the way through and came back up again. So again, I think because we are on the lower end of this spectrum over here, we got to see if this is going to be a true trend reversal or just a bit of a retracement back and forth, reacting to news. Japanese numbers were bad, obviously the manufacturing numbers, and I believe that's what kind of shot this forward. That's what that's why we saw kind of as much of a piece, as much of a jump as we did. But again, trend is really starting to slow, right? It says that we're in a downtrend, but these are technically 2 bullish candles. So downtrend with bullish candles, it's kind of like, look across to the left, you see that we're in an area of demand and buyers. Looking on the 4-hour, you can see what do we have over here. Price made it down to here. Well, that's this single wick right here. There was a gap, right? Price gap down, came back up. So this was a gap area. Okay. So again, hit it once. We touched the top of it right here. You guys will see if you guys can see the cursor. Actually, let me move this so it's in a correct position. It's there. Okay. I can extend it across if you guys really want. All right. There's the whole body. So you guys can see what we bounced off of, right? And this is what we talked about. Whenever you have this kind of sawtooth effect to the downside, you're going to bounce level, level, level. And you see we hit the first one, came up, drove through, hit the second one, drove up again. We'll see if it's able to make it all the way back to the top before it kind of pounds through again. And again, you got a little bit of a level here, and you got a really nice level right down here, sitting below. So there's a couple different things that this can run into on the downside. So trying to see if this is going to be a fundamental bounce higher or if this is just going to be, I'm going to crack level, crack level, crack level, crack level. Yeah, I mean, we're dealing with like a 30 pip range here. So not the largest amount. Now, with that being said, okay, tonight, okay, nothing. Okay. Tomorrow, retail sales. Okay. Retail sales is talking about the consumer spending money. Consumer spending money, that's a good thing. It's supposed to be 0.2 higher than what the previous was. That's going to be a mover tomorrow night. So again, at 9:30 tomorrow night, we will have the opportunity to kind of look and see how that one bounces around. I think that will be a good one because again, Aussie's been a nice mover at night when there's nothing going on. And again, with some of the levels that we have forming in here, particularly the top side, if we can get this to grind higher, we already know that there's sellers up here. We know there's sellers up here. We know there's sellers up here. So we'll see how far up this can kind of move, or if the Aussie data has the ability to kind of break through the bottom and cut away all these demand areas down here, right? Get this chop, but this back and forth kind of boom, 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 just bouncing. If we can get rid of that, look at this daily candle, right? We clear below. All we got is this wick to deal with. And if you go back even farther, you can see the price really hasn't been here often, right? Hasn't been here much. So again, a little bit of opportunity to the downside. I just hope we don't suck back into the blue area. That's kind of the only thing that I'm hoping. All right. So let's drop down to Aussie New Zealand. All right. So Aussie New Zealand is basically just more or less chop back and forth. As you guys can see, again, Price came all the way down, it hit, it went all the way back up again. It retraced about halfway through. Kind of an interesting place to retrace. The wick behind a wall was sitting right here, so it didn't quite make it down. Again, you were about 1.5 to 1. Actually, probably a little bit more than that. I remember we based the area back here. Yeah, it was this top area that we were basing the area off of. This one. Okay. Edit. Just change this to something weird. Okay, so there's the top one. And again, that was this drop, sideways drop again, and again, formed this level here. And that's what it bounced off of. Okay, so again, risk was tiny. It definitely wouldn't have cost you any money on this one. Typically, when you see things turn in the middle here, again, they are news kind of related. And again, the reason why this one moved, if you guys can take a guess on this one, okay? And again, right here is 2 o'clock, right? Because we're at 14, and right now we're at 21, okay? This is because of gold, okay? Because again, the U.S. dollar is not part of this pair, but gold is. Okay, so this is a kind of gold reaction back and forth, and again, retracement back up again. So this top level's been holding. It's been hit a couple times, so I don't know how much longer it does. It will have the ability to hold. Looking at this one, because we have no trend, a true trend on this one, and it's just kind of grinding sideways. I mean, I guess we could say it's an uptrend setup, but it's not really. I mean, looking to the left here, I got 2 descending wicks to the downside against a wall. It's not really the best kind of uptrend for me. I would say it's more just going sideways, maybe slightly up. You guys can see on the 4-hour, it's literally just kind of it's teetering back and forth, right, between these two zones. Again, we are in the upper area now, so if we do get a red, green, red, I would be somewhat interested in taking this, depending on where it is. If it's over here at 104.30, I'm okay taking it. If it's down here where we have this dotted line at the 104.25, I'm a little bit more hesitant because that was an area where we had a nice rally, a basing area, and then 4 candles straight up in the air, a 2-hour period where we really kind of rallied back up again. So would be a little bit careful on that one. If the big wick in the past was a clearing wick, did big money know that far back we were headed back there? That's a lot of back in one question. Yeah, basically, so there's a lot of different reasons why you would have a clearing wick. Currencies is not the stock market. Unfortunately, people confuse those two. Typically, what happens is when you see a big wick here, it's a lot of indecision back and forth. Because there is no centralized exchange, sometimes some platforms you won't actually see that wick. It depends if orders are closed up there or not. And people will notice that sometimes, like, hey, I don't have a wick over here. I don't see that, depending on how my chart was set. In the U.S. stock market, because there's one centralized exchange, it's easy to clear out a bunch of wicks, right? And again, those wicks are not generated by brokers. Those wicks are generated by big money because it's very obvious most times to see where people have their stop losses. Not because they have any special software, because they can look at it on a chart and know exactly what people are thinking. Again, we've been talking this last week about a lot of bear traps. Well, bear traps are easy because you know exactly where support and resistance traders are going to put their stops. I mean, I'm sure almost all of you guys in the stream tonight could tell me that, So again, part of the problem with these wicks is you don't really know what's real and what's not real in them, okay? I like these things for retracement, but as far as kind of analyzing them, again, it's just really kind of people, it's just indecision going back and forth. They really don't know what's happening, and money is transferring back and forth, and people are pounding buttons. And market makers are like, man, there's so much volatility right now. The bid-ask spread is widening and widening and widening, and that's how they get paid. So it's kind of one of those things. It's not. I would say it's not necessarily real. Now, a clearing wick like this, obviously a clearing wick like this one right here, has taken out this zone. Okay, this is a great zone. This is a drop, very, very clean, kind of sideways movement, nice push down. Would have been a great zone. You guys can see if we drew the box here, you can see it would have hit here. But once it clears through, we know that the order is kind of the science behind it is not there. So the science is when you see turning points like this and you see wicks, a single wick is a establishing of orders. A double wick means that those orders have been touched twice. They are then cleared. Okay, so the whole point behind supply and demand trading or price action trading is you're looking for unfilled orders. If price is able to blow through and go all the way up, obviously the only way that it was able to get there was no orders there. So the science of this drop-based drop is no longer valid, if that makes sense. Okay, technically, there's no way that price can go above if people are willing to sell it right here. Correct? Like if I put, I'll do like a little kind of funky. Whoop, no, I went that big. Nope, delete, not what I wanted. Right? So let's say there is a block of 1,000 orders right here. Is there any way for the price to go higher? Like who the heck is gonna, why would somebody, if this guy is willing to buy orders when they hit this price, how would price ever get higher until this guy is gone? You see what I'm saying? It just wouldn't based off market dynamics. So you see a clearing wick shooting through like this, you know that there's no orders sitting in this area anymore. This has cleared those orders. So as far as our analysis goes, we can look up and to the left, go higher, here, higher. We can look back and encompass this, but then we have to go to the top and look left, and then guess what we got to do? We don't go here. We go up and then look to the left. It's like a mountain, if that makes sense. Clearing wicks affect orders placed in the past, not the future. I don't know what you mean in the future. Like nobody, like trying to figure out easiest way to explain this. A clearing wick wipes out orders in the past, which means orders should not bounce off of that same area in the future, if that makes sense. You wouldn't consider it a strong area. It would be a much lower ranked area, if that makes sense. Does that make sense? Okay. Yeah. Basically, the easiest way to think about this is do this as like a mountain, right? Like think about a mountain range. You may have up and down, up, down, up, down, up, down, up, down, right? Or here and then a big peak and everything. But if you're looking over here in a field, you can only see as high as the tallest mountain, right? You have no idea what's happening behind it, right? So a lot of this, if you have a clearing wick, don't look what happened over here. None of it matters anymore. That's the easiest and best way for you guys to do it. Okay. All right, going to Aussie dollar. So Aussie dollar, obviously, we know that this one was affected by some gold talk. Again, dollars involved with this one. Again, this one showed dollar strength. Okay. Now this one also is at the very, very bottom. Now I like this zone. It bounced off of this zone. We had this kind of as a target last night, right? Here was 19, and we talked about right here. We were kind of skirting along the edge, and we wanted to see what it did. And what it did was it pulled back. It actually went slightly higher than the 30-minute kind of area we were looking at. It actually pulled back all the way to the 4-hour, hit this kind of piece at the top, and then once news came in, it collapsed. So it's one of those things. An old mentor of mine, he used to always get super angry when anybody asked him if news made any difference in the world. And he would just say news is a catalyst. It doesn't change where things are going to move to. So in this case, it came down, it bounced off the level, it came back up to get more orders to be able to drive through that area. It went up, it stabilized at this basing area, hit and went down. It didn't matter. Okay. Now, where we go now is very interesting though, because if you look, we still have this gigantic kind of funky wick from way back when. I hate this candle with a passion. I can't wait till price has blown through it so I don't have to look at it anymore. Okay, it doesn't tell us where there's orders inside of there because of the type of wick it is. But we are at an area now, we were at the bottom, right? And we literally touched right to the bottom. And again, not surprised it's pulling back. Why? You guys will see. This is slightly higher than this. Well, why was this bottom over here at, what's so special about 68.34? Okay, 68.34 is right here. Okay, super, super close to the bottom. Why the heck did it turn on the bottom over there? What are we missing? Well, pretty easy, right? I just said it. 68.34 is right there. Why did these two things go through? What's magic about this bottom number that everybody in the world can see? Oh, look at that. That's a support area. Okay, if it breaks support, I should go short, right? Yeah, you should, right? As soon as you go short, what happens? Boom, you go up and you get your stop loss taken out. And again, here is the kind of prior kind of like pivot, right? It came down, went up, it pivoted, and went down. So that's where stop losses are. So what people are doing is they're trying to hide above this area. That's why price rallied back up again. Okay? So again, simple trap that you need to be a little bit cautious about. Now, it has cleared. It didn't really pull all the way back, which I don't like. If I was looking for a re-entry, I'd probably wait till it got a little bit higher. This is a little bit close for me. I would probably, again, I'm leaving this because that's from this zone here. But you guys will see this wick over wick. I'd probably wait till price got up to that area to even take attempt to go shorter. Once everybody else is out of the trade, Once it wipes out those buyers, they'll be too gun shy to get back in it a second time. But that's why we had a bit of a pop here. Okay, but again, nice kind of big movement down. Again, you guys will see. This one was at 11. Okay, this one was earlier. Okay, just following up on new questions. Okay, trying to think if I would even take anything with this right now. I see it's matching over here too. You guys see the lines right there? Here, I'll go back to you guys. I don't know if you guys were able to see or not. I had zoomed in. You guys see that same thing? The 43 is also where these all tickled. So obviously that's there's an area there. Honestly, right now with this one, with all the news that's coming up later this week, I don't know that I would. I think it'll be interesting to see how the news reacts. I would like this to kind of turn here and this to be the bottom. If we grind back up, I'd be willing to get short somewhere up in this area, probably up in here. If we can go through this kind of zone again, I'd wipe it out completely and be like, yep, zone's done. It's been breached on both sides, but I don't see anything right now that I love in this one. And the other reason why I would like it to pull back more is I'd like to see somewhat of a setup here. Again, this is a lot of red down. You guys, we can look back here for a while. This is a lot of red down with absolutely no green in pullbacks. Okay, we are due for somewhat of a green pullback of some sort on the daily. I think I'd much rather wait to get short until we get that pullback into a nice demand level, or I'm sorry, into a nice supply level. Again, you have one up here around 68.95, but there's some other ones that are a little bit higher as well. We'll see where the green comes to. So that's what I'll be waiting for, is for my daily to give me the signal. Okay, looking at euro pound. Okay, this is going to be a pair that's going to be all over the place. Okay, now we had marked this off last night. This one has retraced a bit back down again. It's up to you at this point if you would continue to hold this. Again, like I said, we have about 10 hours until news. Early morning, the only thing you have is manufacturing PMI. Okay, but while manufacturing PMI would typically be a risk, the fact that you have so many of these high, rates and everything like that at 7, I think more eyes will be focused here versus, the London Open. Especially if this number beats forecast, I think that would help it. I don't know how much it can hurt it. But right now you are looking, it's 105 pips down so far based off that level off the daily and the 4-hour. Again, we had a profit target somewhat back down in this area. Probably, actually, it should be more there. Okay. But yeah, we're still short this pair right now. Okay. Let's see. We're 100 in. Yeah, I mean, we're 2-to-1 risk to reward ratio. So if you were going to be trailing this to the downside at this point, I mean, you have I'd have profit targets set at least to, well, I'll just use this green line. I'd be trailed probably at this level at this point. So you'd have a bit of this locked in already. If we can get another drive forward, I'll start to move it down. Let's see. Nah, you know what? I'd move it down a little bit more. Move it down to there. So, that kind of protects you. You've seen some kind of pops here. You may even, if it breaks this level here, you may even want to, trail this one closer going into news tomorrow. But right now you would have approximately 33 kind of locked in. Okay. To the downside if you wanted to start trailing it. Worst case scenario, though, you move yourself to break even. You're locking in 5-10 pips. Worst case scenario, you walk away from it. Okay. It doesn't matter. So that's kind of where we are right now. Again, it looks like a retrace over here. There's not really a whole lot on the 4-hour that is stopping it either. So I'd really ultimately like this to get back down to 90. I'd be pretty excited with that one if we could go back down to the 90 with some good data tomorrow. Okay. Let's see. Euro yen. All right. So not quite all the way down the bottom area. right? We had a kind of a profit target over here at 102.20. Okay. We made it down to 102, I'm sorry, 120.34. So we made it within 14 pips. Again, you'd be trailing this one to the downside. It actually has broken a little bit of a level, kind of the second level right here. So this actually is not a horrible place to get out to the downside. But again, broke through the first target, got pretty close to the second. And again, this one turned with really not a whole lot there, even on the 30-minute. You may have kind of taken, you could have potentially taken yourself out the break of this previous high. Okay, it went down here, went lower. The second it broke here, you may have drug yourself out of it. You're still pretty positive in it right now. Again, this had 14 pips initial risk. Right now, we are up in this position. You're up 68 right now. Okay, at its peak, you were up 96. Okay, with this kind of the euro obviously continuing to kind of falter and come to the downside. So again, risk was very tiny. This is a trade that's been going on for a while. This is not, well, I say a while, but it triggered on Tuesday night. I guess Monday into Tuesday night, and it's just been kind of grinding down. This is one of those ones you may have taken it off today too with FOMC, or I'm sorry, with the which is like the rate cut, just because to protect what profits you had because you were profitable. Again, this was a very, very slow trade. This is more of a swing type setup, but again, we knew that going into it. Being 100 and something kind of target away. Again, its ATR is not that large, so it was going to take multiple days for it to unfold. Okay. Have you covered CAD Swiss? No, I have not done that one yet. I don't cover CAD Swiss too often because it has such low volatility, but I can cover it if you want. So that's where we're going with this one. Again, this is a slow and steady. It's just taking forever to kind of to move down there, but it is it's well on its way to the bottom. We'll see if it is able to retest now, but again, most likely, had I been looking at this during the day, I would have taken myself out of this guy. Looking at euro dollar. Okay. All right, so we got the break. You guys remember we had this little kind of this is the alert, the 111.26 area. Okay, we watched price hit it, which should alert you that it was coming through. Okay, at that point it came back up. Again, there's your alert. I mean, again, it pulled up. It hit. It pulled up into an area of these little saw teeth right here, and then it was off to the races. Okay, this would have been kind of setting a breakout trade to the bottom side. The risk on this one, let's see. Probably would have kept a higher. Let me see. I probably, this was from prior before. This was kind of what we're using for kind of the retest through. I probably would have done most likely that. Let me see what we have here. Well, hold on. Let me think about this for a second. So this is the zone that we were worried about. Let's see here. It's super ugly in there. Our measurements on this one. Definitely would not have taken 30 risk on that one. I probably would have done. Let's see. Yeah, I probably would have done that to the top side because that was the last kind of peak where there's a nice momentum out. Hold on, let me see something here. That zone's just a little bit too small here. I don't know if that's what I would have taken. Actually, you know what I probably would have done? Now that I'm looking at it, this is what I would have done. I would have done that. Okay, there was our bounce trigger. I would have used this prior high on the bounce. That's what I would have done. And then again, target would have been. Okay, target would have been the similar thing that we saw over here. been this to the downside. It would have been this. Okay. So I've been risking 17 to make 122 or 121.6. Start on the 10 minute because it's been forever since it's been down there. It's probably what I would have looked at. And again, you guys can see, similar to the other one, had you been trailing this down, it went sideways, kind of went across, went down again, did not break this level, came down, retraced up, did not break this level, came down and kind of went sideways, and then started to collapse. Okay, so we'd be trailing this most likely to this area right here. So worst case scenario, you would have, oops, not that. No. Okay, there was your trigger. We'll duplicate that. You'd have it trailed down to here right now. Okay, so had you, again, 17 pip risk on this one, you would have had about 56 pips locked in, or 55 pips locked in already. Total in the position right now, you'd be up in it approximately 78. Okay. So again, that's how we do these things with the alerts. When the alerts are there, again, that's a trigger for you to come back. We had talked about this blue area, right? Let me bring it back down to the 30 minute to make it a little easier to see. This blue area had been a magic number again. This was a little bit of a trap inside of that area. It was giving us, like, not necessarily the retrace. Again, went through 1, 2, hit just the very, very top of it, 3. So it's either 4 or it's either the 3 or the 4 that broke through. Okay, so again, tiny risk on it to be able to kind of do well with it. All right. So that's where we are now. Again, it's still continuing to the downside. Again, large candle. If we get a green, that gives us the downtrend setup on the daily. Start looking for the 4 hour. There is a zone right above where we are that I actually kind of like. The way that this is formed, the single wick against the wall, it's definitely a pause, right? Very large candle, bit of a pause, very nice candle to the downside. So again, we'll see the downtrend set up first on the 4 hour before we obviously see it on the daily. And again, you guys are already starting to see it right over here, right? If we were to do this one, it is in a downtrend setup right now, so we could go lower and look for more orders. We could go down and look at a 5 minute in this one, but unfortunately, 5 minute at night is a little bit harder to do. There's just not, I can stretch it out and you can say, oh, look right here, there is a little bit of one right now, but unfortunately, we're getting to such small zones. We're talking about 1 pip, 1.5 pips. It's when the zones are the same size of the spread, you're trying too hard to find something, if that makes sense. Okay. All right. Welcome, James. You made it, buddy. All right. So euro dollar, again, not a bad one. That's why we set alerts. And again, if you guys aren't familiar with this platform, again, go over here, set your alert, click your alert, go to prices, go to price level, set the alert right here, and then boom, you'll get a notification. And if you have the app on your phone, it will actually send it out to you. Okay. Again, I do not. But all the bells and whistles, I'm definitely thinking about putting it on there. I'll just tell my kids that you're not allowed to touch that one. All right, going to Euro Aussie. All right, so Euro Aussie is finally giving us the turn. It actually broke higher than this first level and actually pulled the top one. So again, this is the risk by picking levels that are close, right? If there's a level on a level, you typically want the upper level, right? I know we talked about this last night, but I did like the way that one was formed. In this case, it went through and you had to use it off the top level, okay? So this one hit, came back, hit again, and has dropped again. Nice little kind of drop away from it too. Again, did go slightly above, and you have to make sure that we're in on this one. You potentially would have gotten stopped out, but had you done a confirmation, you would have gotten in here, okay? So your risk would have been a little bit more, and you'd be driving down. Again, your first target would have been here. That's where we kind of broke through. It is now moving down towards our second target, the 161.02, okay? And I don't think it'll have any problems getting there, probably tonight too, because of the Aussie data. It looks like it's continuing to kind of drive down. And again, a lot of lines, this one's a little bit busy, but we talked about different levels, particularly on the 4 hour, right? We had a bit of a pullback right where price is right now. But again, that drove pretty deep into the single wick that we said, here's probably a hiccup, here's probably a hiccup, and then obviously here's going to be a hiccup. You had this up down kind of spike off the bottom with an eventual target somewhere down here at 150.17. Obviously, it's got some time. It's got some time before it gets down that far. But this is a nice way to kind of set up yourself in multiple kind of different profit targets on the way down. I don't think we'll have any problems hitting this next one. I think we will probably bounce a little bit off of that one. That kind of went up and kind of gave you a little bit of a W effect before it went higher. We'll continue to see where it is. But again, this was a confirmation entry, big spike through. And again, you could do the big spike retest entry, or you could have done the red, green, red. So you could have got into this one two different ways. Okay. It's funny that was there. Okay. Any questions with this one? I know this one's a little bit kind of more confusing because I have all the lines for the different profit targets in here. I have something that's somewhat testing on this one right now. I can come back to that one when the delay is over. So we'll see. Let's go over to pound yen. So pound yen. Look at this little tiny candle. So a little bit disappointing. Obviously this one did have movement up. It grabbed the orders and then shot right back down again to the start of the move. So, overall for the day, when you look at this one, it's 50 pips. It's lower than the ATR. When we started earlier, I think it was like 38. Maybe it was a little bit lower than that. It wasn't really a huge mover. You guys can see it. It's more of a retest, a pop, and then a drop right back down again. And that happened about 7 o'clock this morning. A little bit later than that, actually. Yeah, because right now it's saying that we are at 19, but it's 9. So, yeah. So this morning, basically, you saw that pop. And it wasn't instantaneous. It went up. It hit the level of basing that we talked about here, and then shot back down again. I don't know. Did anybody take this one? Is the Aussie? Yeah, because the Aussie is in two separate positions. And I wouldn't say it's the exact opposite correlation because Aussie dollar is one of those pairs that is also based off of gold. The Aussie is based off gold in general. But if anything comes down to like kind of big moves in the US, you'll see the Aussie dollar move, but you won't see the Euro Aussie move as much. The Euro Aussie will move on inflation fears though, because again, gold is a hedge for inflation, sort of. But again, that's why you guys see the pop in this one. I don't know. Ernest, I don't know if you were traveling today, so probably not, but this is one we discussed. Who else was there? Josh, James, I don't know if you got anything on this one or not. Lou, did you get anything on this one? I feel like somebody should have got this one because this was a pretty easy kind of bounce up and bounce down again. It wasn't a bad number of pips either. You're talking 75 pips to the downside. I hope one of you guys got this one. But we were here talking about what was going to be the next candle in this, in this process. Now let me get rid of this. There we go. No, James is too busy, emptying that dumb truck of money outside is what it was. I know. Getting another, double fist in those CCs. CC's in 7. Are you doing 7 or are you doing Sprite, James? I always meant to ask that. Or were you doing like CC and Ginger? So where we are right now, again, we are still in this bottom area. We talked about this being a buying area this far down, right? This 131.69 to 130.59, right? This kind of 100 pip range. That's what we hit into. And again, we based off of it. What did it do? It went back to grab more orders and push back down again. So it'll be very, very interesting to see what the green candles are doing right now. If it has somewhat of a failure to go higher, that would kind of say that, hey, listen, it's trying to grab orders, and there's actually orders now being established right above where it is to help it thrust and push deeper into the zone. So it only kind of moved this much. It was very, very tiny that it actually went in. But again, like clockwork, right? It came down, it hit, okay? The way that you would have traded this one is it popped up, you short it from the top side back down again, because again, that keeps you with trend. Downtrend, setup, drop to the 4-hour, look for a zone. What did it do? It popped up, it hit the zone, and it dropped back down again. This is literally textbook, right? But this is exactly what we say. We start on the upper time frame, we figure out what the trend is, downtrend setup, drop to the lower time frame, find your zone for the pullback. Your risk level is what the zone is based off of. It dropped back down. It actually went back to the start. Again, this candle right here went to the start of the move, right? Which is what you're supposed to do in a racetrack type candle situation. And boom, you're out. I mean, this was textbook. So one of you guys should have got this one. Can't be the only one. Right? So again, I'm going to wait to see where we, again, if we can grind back up, I may be willing to take another short. I like the way that this one did not go as high as the prior one. If it starts to kind of flatline lower, we'll see. I will. This one is definitely one. If you guys are up early tomorrow, the baby typically wakes me up before this. I'm gonna jump on first thing in the morning, and I'll try to see. Again, I want to see where we're at before all this news comes out. You will get movement off of this one a bit in this pair in the manufacturing PMI. Let's see if it drives us back into a zone of some sort. If it drives us up into here, it potentially. I mean, it could go higher, but that's quite a move. That would be 200 pips. I don't think manufacturing is going to drive it that far. If we can get a nice pierce into this kind of this demand area, that I would be pretty excited about. Because that would give us the potential to actually go lower. I may throw a binary on the bottom side of this thing, something pretty cheap, and see get 3-4 times the risk on that one. Okay, that would be definitely something. This is definitely a binary trade. If you guys understand Nadex, you understand binaries, this is definitely a place that you could trade them tomorrow. Take advantage of the not being able to lose more money than you put into it by buying those options, right? This is a perfect setup for that one. But again, this is one you guys should have definitely caught. Also, just for you guys, because a lot of you will be entering the combine, let's have this discussion real quick. We'll probably run a little bit late tonight, but that's all right. This thing is up 76 pips right now. Okay, how much is it worth per pip? Well, it's worth $9.16, right? So pull calculator out. Oop, I broke it. Oh, I did it again. Calculator. Take it out. Again, let's do this based off of the little guy, right? The little $75 one that Nadex was talking, or that what's his name, Ernest was talking about, right? So it's $9.16 times 76 pips. Oops, hold on, I did that wrong. 76 times 9.16. There you go. $696. Now, how many contracts can we trade? 2. Okay, you didn't really suffer much heat in there. 2. Bam, there's stage 1 done in 1 trade. Nadix was the bomb today. You're the terrorist. Yeah, so guys, there's your stage 1 right there. And again, had you already been funded in trading, not a bad payday, right? You made your $1,400. And again, tomorrow's a big day. Okay, but again, stage 1 of that combine, you need to make $1,000 with the summer special, right? There, you're out of stage 1. Okay, and remember, and this is a remember, right? Stage 2 has limitations on news releases of when you can be in the market. Stage 1 did not, or does not. Okay, so again, remember, that's kind of one of the caveats. You do not have that caveat as far as stage 1 goes for major news releases. Stage 2, you do. Okay, because that's the risk one. All right. All right, let's go into pound dollar. Futures economy can still only trade the futures of the currency. All right, so this one again, it drove down. It looks the same. I mean, it didn't really do much. It pulled higher. It went a little bit higher than this zone, but kind of the same thing. Really, no much more discussion on this one needs to be done. It's the same trade setup. I want to see this one actually is at the bottom of the zone. We'll see if we can push through with something consistent. It's kind of flaunted with it and pushed up here, and went up again. It looks like it's finally pushed through on the 4th attempt. And again, you guys can see, it hasn't been here. I mean, I'll drop this back to weekly. You guys can see the last time it was up here was March and February of 2017. So little couple months ago, right? It's been a few, right? So yeah, that's definitely driving down. Okay, a lot of weakness. Again, this one will move tomorrow morning as well. Again, this is definitely most likely would be an AX pair as well. Okay, I don't know that where we're set up. I don't know that I'm willing to take this in spot currencies. I'll go with the easy one, the easy way, right? All right. The pound New Zealand trade. Again, that's up there. I will move that actually. I'm going to move that over. Oh, it's loading. There we go. We move. All right. So remember we had that retest all the way down. Okay. Now, a couple of things you could have done. Right at this yellow line. Remember we put this yellow line here yesterday? Well, here we go. Here's your red. There's your green. Your green, your red, your green. A little bit of heat. And boom, off to the races. You guys see how it magically kind of stayed and pulled back to that line again. Drove all the way up, and it ran back into this kind of top section. Missed it by just a tad. Again, that's just kind of the buffer on it. Not the end of the world. Where we're on this one, because it is such a racetrack, again, we're expecting it to kind of go all the way back up again in time. This one will be a mover tomorrow. I'm going to warn you guys, though. This one is going to move a lot tomorrow. This is not a net expiry you can trade. I would stay with the pound yen or the pound dollar just because this one is going to get funky. It's going to be whippy. The spreads are going to get enormous on there, and it's not the best usage. Again, if we can get back up into the 1.8, the 188 area, then you may be a little bit, safer to trade this one. But I just think stay with the pairs. They're going to have more liquidity. They're going to give you better zones. They're not going to be as kind of funky and whippy with where price is going to be. Okay. But again, so this setup is, it's doing its retracement back again. If you're still in the retracement, again, I would have this thing drug all the way up to here, 185, basically 185. It goes any lower than that, you got a 16 pip buffer, just take yourself out. Bank your profits from this level up. That was still a pretty nice grab if you got in from that kind of confirmation in. Yeah, it's 140 pips, and again, 140 pips, and you're looking at 6.5, right? Bring this up again. 6.5 times, what did I say, 144 or 141? Whatever, 141. Okay, another 900 bucks. Okay, so again, this would have been the retracement off the racetrack. Okay, let's go over to dollar Swiss. We did dollar Swiss already. Let's go to dollar CAD. Yeah, there's no CAD news tomorrow, but there is some on Friday. Trade balance. All right. All right, so dollar CAD is in the upper range of this zone at this point. Interesting thing is, too, you guys can see this little piece right here. You guys see this basing? Where price came down, up, based, and then that was the start of this move from here to here. Okay. That's what I grabbed before the last kind of kickback. I don't think this zone has much left in it. I think we'll be due to kind of break through the top again. With any type of dollar strength news, anything good tomorrow, I think this is going to pop. If it's just blah, it may start to retrace back down again. There's no Canadian news, but like I said, we have this manufacturing number, and if this manufacturing number can give us some actual dollar strength tomorrow, or anybody's comments about strong dollar tomorrow, anything that gives us some oomph, I think we will break out of the top and then start retracing this up again. This is not a bad racetrack. Okay. You got a little bit of wick over wick here, and you got a little wick behind a wall, but this zone right here, I think, is probably where we'd be looking for a 133.73 area. Something up here, somewhere in this range, 133.66, somewhere before this drop would be where I'd kind of put a target on this racetrack to the top side. So, again, you can wait till it launches through this zone and then use this zone as your risk level. I don't think it's that big of a zone. That's 40 pips, so yeah, we'd want to make that a little bit shorter. And probably, you know what I'll do? I'll do this. We'll do it off of this zone because that's actually where the pop came from, and then boom, boom. We haven't seen it since. Okay, so we'll use that. That'll bring our risk down to about 24. It'd be 24 for approximately 135. Okay. Now again, big news release, that could happen. Okay. So an alternative on this one too, again, if you're going to take this in spot currencies, no big deal. You're talking a 5-to-1 risk to reward ratio. You only have to be right 20% of the time to be able to make money at 5-to-1s. So again, it gives you a kind of high chance of success there if your analysis is correct. Another thing you look at too, 173 pips is quite a large move. There are weekly positions and daily positions that you guys can kind of sneak into. We can kind of see where it goes if it's just going to kind of meander around here. We could play this into non-farm and the Canadian number on Friday. That may be another option if we can get a pop. If it does start to retrace to the downside though, it'll most likely probably come back down to this 131.18 area. Price tends to revert back to where it did prior to news, and again, it bounced here based off of a level. We kind of knew that. That's most likely where it'll come down and stop tomorrow if it doesn't go through this top side. So I wouldn't be surprised though, actually, if we end the week at that 131.20-ish number, unless we get some crazy news that pushes it up. I think we could end up basically stopping somewhere around kind of this level in here. Okay, going into next week. All right. The dollar cat is one of those ones. It's either great or it just gets stuck sideways. And I'm wondering if we're going to start to go back into the kind of the stuck sideways pit based off of where we are right now. Okay. Let's go to dollar yen. Dollar yen was a mess. Okay. These guys today. All right. You guys remember we drew this kind of channel last night? Boom, 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 and then like all this stuff. So it was holding very, very firm. It came up, it hit, went back down again, grabbed more orders, came back up again, and dropped all the way back down, grabbed more orders at the bottom, pushed up again, and then pulled back. Only this time it went halfway, and then it launched through the top. So this one has just been like unstoppable today. I don't know that it technically all this dollar strength is really justified over here. Again, the Japanese manufacturing number is what really sent this higher again and launched us through the top. So, it was down here before that number came out. That number came out, and that's what drove us higher. So I expected to retrace back down again, but it has broken a few levels. It is technically, I know, you guys can say, oh, look, there's movement here. We should be drawing it. But this is 1, 2, 3, 4, 5, and it was expanding out. Okay. I typically like when they kind of expand in, they consolidate. This one was getting wider. It was going to explode one way or the other, and it just happened to pick to the downside. So it's not my favorite level where we are right now. We are in the uptrend phase. Oh, well, that's not true. If we remove the current green candle, we are going sideways with an upward bias. Actually, it kind of shows that we're in a downward bias, but obviously, depending on what the time frames are, we would go with the upward bias. If we get a pullback here, again, it's if we get a pullback, it's a signal to go, obviously long, but look what we're running into. So it's not really the best. Areas that I would mark off would be kind of up here. So what's sketchy about this one is this is the retest off of the gap. So yes, it is a big pop, but it's the retest of this area. Okay. But you're going to have to worry about this too, because again, you need to mark off the initiation of the gap. So it's going to get funky up in that area right now. This one I'm not as concerned about. We'll see where it goes tomorrow. Like I said, I think we'll have I think this will retrace all the way back down, probably into this 108.70. I think it'll go back down and literally suck it, sneak itself right, like suck right under this kind of level is where I think we'll go back down to. Okay, because again, this is a news-based pop, especially if these reins failure to go any higher. Okay, that's the last one on the list here. Somebody wanted to see. Let's see, who was it? Somebody wanted to see. Was it the pound? There was something that somebody asked for, and I said I don't normally look at that one, but I can look for it. I'm trying to find it now in the chat. Was it pound Swiss maybe? Where is it? Or CAD? Oh yeah, have you covered CAD Swiss? All right, Vic asked for CAD Swiss, so I might as well do that one. Let's see, is it going to be over here? It is there we go. All right, add this to workspace. Second, let's bring it up into 3 charts. We'll do this one. Let's go to daily. Let's pull 4 hour right here. Pull 30 minutes here. All right, so in this pair right now, it shows me that we are sideways with an upward bias. It is pushing up into some candles. All right, now it is 3 candles, and again, 3 candles is good. Odd numbers are good, even numbers are bad, but they're very interesting because they're very, very long, and the bodies are very, very tiny here. So whenever you have bodies that are so tiny, it shows you that they're more indecisive candles than anything else. They're not necessarily a strong or trending or excited candle. Again, this 75-90-ish area seems like it's a pretty magical area. It's hit here, it's hit here, it's hitting here again. We're about 50 pips from that area right now, so wouldn't say it's the best trending thing right now. I mean, if we get a red, if it suddenly turns red right now, again, this green is kind of engulfed, so it's telling me right now that it's sideways. Looking at the 4 hour chart, 4 chart's a little bit better. There are definitely some more kind of distinctive pullbacks. But one thing that I'm noticing is you're seeing that there's a double wick here, a couple wicks here, kind of a double, triple wick here. You're seeing a lot of stuff that really is just I mean, again, little pullback off of this one down. It broke it and then retested lower. This is probably the best 4-hour area. Would be here, right? And we've already touched it. That area is, I mean, it's 8 pips. So, I mean, it's not like it's a huge area. If it really goes just straight green up, you would put a profit target somewhere over in here. Okay. If it just goes green, 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 green. Most likely it's not going to. It's already starting to see a little bit here. On the lower time frame, it looks like it's starting to consolidate. You have a nice level here at 75.65. Okay, which coincides with this kind of pop here, but on the 4-hour, it's not that great. So right now, this is sideways, and the rule, rule number 1 basically says on the larger time frame, is it trending or not trending? If the answer is it's not trending, you don't take the trade. So anything more than that would be forcing, and there's just not too much about it. So, so sorry we don't have more of a setup on that one. Starting to smoke, fixing. Forgot to put some redneck in the welcome back. My gear wheel is foxing to start smoking. Oh, it's fixing. I was like, I don't know what the heck you're talking about. All right. Did the video stop? I don't know. Maybe it did. It's still connected. Don't worry. There's not much to see on this chart anyway. But it could have. It could have stopped. I don't know. But anyway, guys, with that being said, that was the last chart. It is 10 after 10. I will be back on tomorrow night, and we can finish up what we started for this week and see how the any of the weekly stuff is turning out here. But it seems like there's a lot of stuff on. As I said, tomorrow again is going to be pound heavy in the morning. Don't be surprised. Like I said, this afternoon again, it was kind of dead until the 2 p.m. thing hit. Don't be surprised tomorrow if there's a little bit of a, if it's a little bit of like a sludgy day. And I say sludgy because there was a lot of emphasis on today. Everybody was focused on today, and obviously the markets moved and reacted. A lot of times when you see that, people take the next day, especially if they lost money, they're like, ooh, I need a day off. I need to take a break. Okay, so it may not be there may not be as much movement tomorrow. I would focus on the smaller time frames. Again, use the 4 hours, your big time frame, and then drop down to the 30 and the 5 for your analysis. Okay, that's what I think would probably be the best bet for you guys. Okay. All right. With that being said, guys, I am out of here for the evening, and I will see you guys tomorrow. Take care.